You're now listening to the smooth sounds of life after debt. I'm your host, the Marcus Garrett. Let's get started with this week's episode. And this is the drop.
Every couple should have 4 bank accounts. You have the one bank account where both of you put your check in, and that's your joint account. It pays bills, light, car notes, everything that's a necessity to live. The second account has a savings account where you both agree to put X amount of dollars of that money in it, and it takes 2 signatures to move it. The third and fourth account, she should have her own bank account, and you should have your own bank account. She can do whatever she want to do. She ain't got to check with you and ask, and you can do whatever you want to do, and you ain't got to check with her and ask. And that way, guess what? The bills are paid, you have a roof over your head and a car to drive. You all are trying to save a little bit of money, and you got to have your own life.
And if you didn't recognize this week's voiceover, that was from Steve Harvey, financial advice from, I think, a show around 2015 or 2016 or so. But that specific, if I could say the word correctly, voiceover has kind of been making the rounds again, and y'all had thoughts. So last week's question of the week was, does every couple need 4 bank accounts? Thank you to everyone that responded in the comments and for leaving your voicemails. I'm going to spotlight a few of you here. And here's what Steve from Arkansas had to say.
My wife and I are in our late 60s. I'm Steve from Arkansas, by the way. And I don't see the need for separate accounts. We've been married for over 40 years. I wouldn't buy anything. I wouldn't spend $100 on anything without running it by my wife first. She wouldn't either. I think the main reason is if I'm embarrassed to explain why I want to spend $100 for something to my wife, then it's probably a dumb purchase. But that's just us. We've been married a long time and we'll always stay married. And we have 20 accounts, but we don't have any separate ones except for retirement accounts that have to be that way. Thanks.
Thank you for the voicemail, Steve from Arkansas. On this week's episode, I actually want to take a little bit of time to share my own opinions about those 4 bank accounts recommended by Steve Harvey, financial advice from Steve Harvey. But actually, Steve from Arkansas, if you are listening, I'd be curious about those 20 accounts that you and your wife set up. So if you want to drop another voicemail, give me and the listeners a little bit of detail about those 20 accounts you and your wife use, I would be happy to hear about it. Once again, y'all can leave me a voicemail as well. Find a direct link in your show notes or visit themarcusgarrett.com/show and I'll email you a link to drop your voicemail. I've got some comments on this week's question of the week. Does every couple need 4 bank accounts? And I'm going to highlight those right after we get to the Life After Debt segment. The award-winning Life After Debt segment is a chance for myself and guests to share motivational money stories. If you tried other debt-free plans but repeatedly failed to reach life after debt, then click the link in your show notes to purchase a copy of my best-selling book, Debt Free or Die Trying: How I Buried Myself $30,000 in Debt and Dug My Way Out, or visit themarcusgarrett.com/debt-free and I'll send you a free copy. The Life After Debt segment is made possible thanks to our partners like previous guest and trade expert Teri Ijeoma. Teri's trade and travel course will teach you how to make up to $1,000 a day in the stock market. Yes, even during the recession or whatever week we are in this week, during a down or an up stock market, Teri's advice can help you. To learn more, click the link in your show notes or visit my website at themarcusgarrett.com/investwithteri. You can find a link to Teri's course as well as our interview. It's actually one of my most popular videos. Check it out today. Again, that's themarcusgarrett.com/investwithteri. Speaking of life after debt, a big thank you to Sarah Arnold Hall for dropping by last week's episode to share her big money goals. Sarah's money goal is to make $1 million in the next 42 months. Thank you to everyone that listened to that episode and supported. For a possible shout out on an upcoming episode, drop your own big money goals in a 5-star review or hit the link in your show notes, because once again, you can now leave me a voicemail for a shout out on a future episode. It's like Brother Jim Jones said, if you can't stay motivated, stay consistent. You know what? I'm not known for my voiceover, so actually let's just hear what Jim Jones had to say.
When you can't stay motivated, stay consistent. All right, consistency gonna bring back your motivation. no matter what it is. You're basketball players, rappers, sanitation people, whatever it is, you dig? That consistency, staying on point, staying disciplined, and staying focused, no matter on them days that's hard, they're going to make the days that you are motivated that much greater.
And we're back to the Life After Debt segment. I want to talk a little bit about those 4 bank accounts and how that has applied in my own life. For those of you who've been following for a while, you know that I read, I think it's closer to 30 now, but originally the challenge was to read 20 personal finance books over 24 months. Actually, it was just to read a book a month, and I ended up reading 20 personal finance books, about a book a month. And I just kind of kept that goal going. That was a personal challenge that I had on a previous podcast, and you can find all of those reviews. I'll send it to you for free when you visit themarcusgarrett.com/salary. As always, there's a link in your show notes. But the book that kind of inspired my journey into these multiple accounts was actually Profit First. I set up 4 business accounts. Apologies, I thought my notes were incorrect, but they are right. I set up 4 business accounts based on the advice from Profit First. It's a great book that I do recommend you read, especially if you're thinking of going into entrepreneurship, or like me, if you were already in entrepreneurship, but you were having trouble tracking where all the money goes. Those 4 accounts are, I have an income account, a checking account, and that's where all the money is deposited for my businesses. And so all my, got like 27 revenue streams or something like that. All the revenue streams go into the income account. You can call that like the wash account. On the 7th, in my case, of the month, I then transfer that to 20% to profit, 15% to tax, and 65% to operating expenses. That's how I do things. You can do it however you want. If you want to learn why I did it that way, read the book Profit First. Once again, a great book. And by the way, if the author is out there, would love to have you on the show. Mike, last name I cannot pronounce correctly. I'd be happy to have you on the show, and you can tell me how to pronounce your last name. So once again, that is Profit First. So those cover my 4 business accounts. Then I've got some bonus accounts. Now, to keep it pretty simple, I've got a traditional checking and savings account. Nothing fancy there. Had it all my life. It's Chase Bank, to be perfectly honest and full disclosure. And it wasn't even Chase Bank when I started. It was, about to date myself, Washington Mutual, a bank that I don't even think exists anymore. They got bought out by Chase. Love it or hate it, I've been with Chase ever since. So for about 10 years now, I've been with Chase. Also have a Chase Freedom card. No plug, I just do. Been with Chase Bank and have a checking and savings account there that I've had forever. I want to say like post-college. You know how it is? Like once you open an account, you're just with that banking institution for the rest of your life, or at least I am. But in recent years, just from lessons learned, wisdom, knowledge, whatever you want to call it, getting old, I began keeping an emergency fund in and I'm using my air quotes for those of you on YouTube, high yield checking account. And I say that in air quotes because, you know, these days a high yield checking account, if you're lucky, is 2%. I think mine's 1.34 the last time they emailed me or something like that. Still, that means that the purpose being, I like to separate out my emergency fund. So in my personal checking accounts, obviously I have my now back in the day job. I have my day job deposited there. I don't do anything fancy. I'll transfer money over to the savings account. Typically like to keep at least like $1,000 just in the savings account. But unlike most people, I actually keep my true emergency fund in this other separate account, in this quote unquote high yield savings account. So I like to, previously I had 12 months there. We've dipped in that a little bit as we're wedding planning. I'm actually getting married pretty soon. Actually, I might be married by the time this episode drops, depending when it drops. So my goal was to get that up to 12 months of savings. Actually, I'm thinking post-wedding, because some of you know I want to get into real estate investment. I was actually thinking of making that about 3 to 6 months and focusing more on my investment accounts, which brings me to my investment account. Right now, only have one investment account. I manage that myself. It's managed through Vanguard. It is a target date retirement fund through VitaSax, I believe. This is not investment advice. This is all for informational purposes. I'm just sharing what I do. So once again, let's kind of quickly review 4 business accounts. 100% goes into income every month. I just have those automatically deposited. On the 7th of every month, I split those out between profit, tax, and operating expense. If you want that breakdown, that's profit 20%, tax 15%, operating expense 65%. For those of you wondering, I just don't touch the tax account. I sit it there for 15%. I talk to my CPA either quarterly or yearly. We work out how much I owe, and I pull that out of the tax account. To date, I've never gone over that tax that I've set aside for the year. So as I said when I began, it's nice to now have a dedicated account that I can go to and pull my taxes from, as well as my profit and my operating expense, versus getting to the end of the year and figuring out what the hell am I going to do to pay taxes. So it's really nice to already have and know that taxes is unpredictable, but it's roughly predictable, will be covered from this tax account that I've been setting aside all year, 15% every month. And then let's see, 2 personal accounts, very simple, checking and savings. And then when we get married, we've already been talking about this. We are actually, and let me be very specific here, please do not misquote me and try to make some kind of reel or IG or TikTok or whatever you're going to do go viral on this very, very specific point. I agree with Steve Harvey on this very specific point. I'm trying to put that on both sides, so you have to do a little editing if you're going to crop this and try to say that Marcus out here just randomly agreeing with Steve Harvey. In a country where 50% of people divorce, and the top reasons for those divorces are money and infidelity, it seems that repeating ourselves and expecting different results is the definition of insanity. So perhaps in this very specific example, couples could benefit from the financial transparency of these 4 accounts recommended by Steve Harvey. And in fact, just in case you forgot, this is a little bit shorter episode, but I'll drop it right here so you can hear it one more time. And I think that'll bring us to this week's wrap.